Hello, everyone. Welcome back to First View. I'm joined by Leda again. Great to see you again, Leda.
Thank you for having me back.
Fresh back from holiday. Think you've been going to see elephants, haven't you?
Yes, I managed to actually carve some me time around a business trip, and I went out onto the place called Madikwe on the Botswana South Africa border, and I didn't want to come back. It was the most stunning place I've ever seen, and I saw elephants and I saw giraffes. Then I had to go back to Johannesburg and work, and it was like, but there are elephants over there. How can I concentrate?
Yeah, it's quite a contrast, isn't it?
It is. It was stunning, absolutely beautiful.
Welcome back. And I thought we could talk a bit about payments today. Um, I got a couple of things that I'm really quite interested in. One is I'm seeing banks doing a lot of payments modernization work.
Mm.
And it's really sort of deep architectural work where they're changing everything, every aspect of the payment systems. So I know some of this possibly originated from changes to Swift, but then it seems to be an awful lot more extensive than that. What are you seeing?
It's interesting because payments has been the area where we've had the most creativity and innovation. I like to joke that payment geeks are having all the fun. And I worked with a CIO for many years, and he was like, yeah, whatever. And he's just changed roles. I won't say more, and is steeped in payments now. 3 days into his new job, he rang me and he was like, payments is fun. I was like, yeah, payments is fun. And it's had a lot of creativity and innovation around the front end, like the origination of payments, the consumer experience, the sort of early stage of the chain, but not that much in the back end of the chain. And so I think there is an element of that trend of change going deeper into the process. Some regulatory changes, some changes in Swift. But I also think it's cost and resilience pressures because a lot of that chain of processing a payment, despite all the innovation, hasn't really changed that much. The handovers are the same, the players are the same, and the technology used very often hasn't changed. So a lot of the modernization is kind of it's time to uplift, to make it more resilient, to make it a little cheaper, probably, hopefully.
Yeah. Actually, we're going to come on and talk a bit about the fintechs in the payment space because this has been a sort of almost like a darling area for fintechs. But
Yeah.
but I guess yeah, cost and the cost of the technology and therefore the cost of payments within big organizations is that the key driver within all of this? Do you think it is about getting down and competing with the fintechs?
So I think cost and speed has been one of the main considerations. And actually, some of the fintechs that have come into the payment space, originally a lot would come in for disintermediation purposes, but actually, most fintech players that have managed to scale play in the traditional chain, just doing a little better. So we haven't seen anyone really, other than the people in the DLT and Web3 space, really reimagining the chain. But we've seen people come in and do certain bits of the value chain better, or adding a layer to bring better data to the mix. So we're seeing a lot of banks that are either partnering with fintechs or acquiring fintechs to go like, okay, if I do this, then that part of the exchange will be a bit faster and a bit cheaper because the technology will be better. Um, We're seeing a lot of that. We're seeing a lot of those partnerships. And I'm seeing actually, without sort of name dropping any of the companies, some very large entities partnering with challengers, with fintechs that do something that is already getting done. It's just a bit faster, a little bit cheaper. And you look at it wondering, how does that play out? Do you just accept that you don't need to build a lot of that stuff yourself, that it's a utility and it doesn't matter who provides it as long as they provide it well? Or are we going to see an acquisitions game to clean up the board, so to speak?
Or a disintermediation game, I guess.
Yeah, also that.
Yeah, because if I'm right in thinking that many of these fintechs run over the existing banking rails, so they're not reinventing infrastructure. They're not doing something that's
Mm.
completely unique. They're just sat on top of the banks, which kind of makes you wonder, well, where's the cost advantage then? Or why is it that banks are so expensive in doing that end part?
It's interesting, right? Because I've sat in a bunch of meetings over the years, and I remember being with a very large challenger bank a few years back, and they were describing to me how they were going to put together their payments process for consumer payments, just like pretty vanilla um, payments that if you if you took the I don't know an average high street bank, the process would have some familiar names in there. Well, let me start by saying that anyone who's not in payments would expect a payment to be a lot simpler than it is. And I think that's the first realization that anyone who doesn't spend a lot of time in payments would be right to assume that it's a process that involves two or three handovers. And it's not. It's a process that involves multiple handovers between sort of your issuers and acquirers and the banking players and the processors. And so the process is more complicated than you expect anyway. You're rightly pointing out that none of the original players and handovers have been removed. Some of the handovers now have more competition, but most of what we've acquired is some extra handovers that either create data richness or more optionality. But actually, if you were to create a diagram, there's more stuff happening. And on occasion, like that meeting I was in a couple of years ago, you're like, well, wait, but why? What have you achieved that isn't about you? What have you achieved that makes this faster, cheaper, or safer for the customer? The answer to that is that has mostly not been the question that is being answered, exactly because a payment tends to be more complicated than most people expect. The innovation we've had has either been at the consumer end. So when you come in as a business or an individual, there's a lot of innovation, a lot of creativity, a lot of options. But the processing has not really changed in terms of the handovers. If anything, there's a few more people in the mix to create that data richness. Why was your question? Well, because those handovers are where we make money. So eliminating those handovers eliminates whole business models.
It's funny. I met recently as a new CIO who came into banking. She came from the energy industry,
Yeah.
and she was getting her feet under the desk. And we talked a bit about payments. And she said, "Yeah, payments is weird." I took a look at it and go, "Why? Why'd you do it like that? Who
It's a good
designed that?"
question, right? It's a really good question. If you were to design payments today, you wouldn't do it like that. You wouldn't do it like that. And it's particularly interesting when we're looking at embedding some of those services now, right? Like more and more embedded services mean more and more handovers. Because when we're embedding a service, like I was speaking to someone recently who embeds loyalty, just super clever, right? If you go and pay for your petrol at the petrol station, you don't want to have to pay and then bring out your loyalty card and tap if it can be integrated into one transaction. So for me as a consumer, great, you saved me a step. But underneath my tap with my phone, actually the way that the handovers happen hasn't changed. The number of players hasn't changed. If anything, there's one more now. And it becomes very complicated because the more we move down a digital era and the more we expect to see embedded services, there is a market expectation that those services will be cheaper. That actually, the more we digitize, the more there will be a price advantage for your customer, be it a consumer or a business. But if we have to invest in more and more sophisticated technology and the number of chefs in the kitchen isn't going down, there's a lot of tension around that price point.
Yes, it's quite. It's almost yeah, oxymoronic in some respects, because you think we introduced more steps, yet it's got cheaper. So uh,
Yeah.
how does that work? Because and is there anybody out there who's fundamentally rethinking the whole payments chain? and doing it differently. And let's leave out the Web3 stuff, just within sort of like core conventional finance.
Well, I mean, that would have been the easier answer, and you took it away from me. Like stablecoins theoretically are all of this reimagined,
Mm.
starting starting from a very different place, but ending up in a place that says, actually, we don't need all of that infrastructure. So actually, very much like the CIO you were talking to, if you're trying to, if the what is moving a thing of value in space from my pocket to yours, because I always like to define banking as moving things of value in space and time, right? A payment is moving it in space, an investment or a credit facility is moving it in time. The rules around it, the regulatory complications, the fees and charges are all around how we do it. But fundamentally, it's about safely, securely, and transparently moving things of value in space and time and getting paid for it. You wouldn't do any of it the way we do it today if that was the ask. So they leaving aside the Web3 and the stablecoin folks, nobody's reimagining the whole chain. People are coming in and reimagining their part of it. So if you speak to like a paymentology, a Marqeta, a Form 3, they'll say, well, we're doing our bit a lot better than what was there before to allow the chain to move faster and cheaper either side of us. It's all part of an ecosystem of coexistence. We're not here to like put everyone out of business. We're here to make the thing better. And ultimately it does work because these companies coming into the mix has created pressure on the incumbents to rethink. But to go back to your question, like ultimately, if you were an incumbent in payments 50 years ago, a lot of the innovation, a lot of the creativity, a lot of the price differential has come out of your margin. This used to be a really, really lucrative space. And that margin is compressed now. And part of the reason it's compressed is because the regulator has looked at the new technology available and said, well, the art of the possible says that real-time payments are now default in most markets. Real-time payments means that you can't do all of the things you may have been doing with the deposits that were sort of yours to play with for an extra day. So it's not just the payments piece that's changing, is the way we monetized banking in general that is changing. Because a real-time clearing and settlement doesn't just transform payments, it transforms everything.
Yeah. Yeah, it makes a lot of sense, and you can see it in other parts of the whole banking service industry, where you're seeing fintech challengers changing the business model and therefore changing the profitability model as well, which is, yeah, it's interesting to see it happen. There's probably still a long way to go through all of this.
Oh, for sure.
Yeah,
It's a long way to go. And arguably, there are days when I'm thinking we've come such a long way because real-time clearing and settlement for payments and the ability to embed warehousing and there is so much change in both retail and wholesale payments that it would be naive to say nothing has changed. But then I was reading a report recently about changes and regulatory drivers in consumer payments. And you see all these immense changes, with wallet wars and everything has moved to essentially a device. People are very comfortable with virtual cards. So from a consumer perspective, it's really, really changed. Fundamentally, though, the vast majority of wallets are sitting on a credit card.
mm,
So, okay. So really, my experience changes dramatically whether I pay with my wallet or not. But if that is sitting on my MasterCard, what happens beneath that is exactly what used to happen before, both in terms of the processing and the
yeah.
handovers, but also in terms of who benefits, who profits, who's the winner in this game. The margin may be different, but it's actually still the same dominant players.
Yeah, it's a really interesting point. You say that about the way we pay and what's underlying the way that we pay. Actually, I'd like to pick that up in a future version. So I'd just like to say thank you very much for joining us. It'd be great to have you on First View again, and hopefully I'll see you again soon. Thanks, Leda.
Right.